bags.
I'm Dr. Who. This is Accounting is a Joke, where accounting makes sense so you can make dollars. Today we're going to take a look at a walkthrough problem on how to properly measure and journalize ending inventory and cost of goods sold under the FIFO method. So if you're unfamiliar to the FIFO method, don't fret, gang. I'll drop a link to get you up to speed in no time. So with that being said, let's get it. Alright, so it tells us that Golf Unlimited carries an inventory of putters and other golf clubs. The sales price for each putter is $119. Company records indicate the following for a particular line of Golf Unlimited putters. Let's see what they're talking about. Alright, so we have a data table with the various purchases and sales for the month of November. And they want us to prepare perpetual inventory record for putters assuming golf uses FIFO. Alright, gang, we know what's going on with this. We're dealing with inventory, and inventory has costing methods that gives us the appropriate amounts for ending inventory and cost of goods sold. And so this particular one we're focusing on is FIFO. And FIFO means first in, first out, which we know the first or the earliest purchases made for inventory will always be sold first. So if I had an imaginary list in chronological order and I'm trying to account for the goods that I sold, we always start from the top, gang. Likewise, if I'm trying to account for the goods that I didn't sell, i.e. ending inventory, we always start from the bottom, gang. So let's get to it. So they've given us a particular table that we have to complete, and first things first, we have to account for our November 1st inventory on hand. So as we know, based on this table, it tells us that on November 1st, we had a balance of 24 units at $53, gang. That's our beginning inventory for the month. So we're going to go ahead and input that amount. And of course, we're going to calculate our total cost by multiplying the quantity of the units times the unit cost each. And that'll give us a total amount of $1,272. We're going to check the answer. Well done, gang. Moving on. Now it's time for us to account for the November 6th transaction, which included a sale. So, based on the table, it tells us that we sold 20 units and we are practicing FIFO. So we need to find out how much did those 20 units cost us, gang. So, looking at this table, we realize that at the point of November 6th, there are only one set of inventory that we can account for. Why? Because the 8th, the 17th, and the 30th of November doesn't even exist. So where can those 20 units come from? The only place that we have, gang, which is beginning inventory. So as we see, we have 24 units initially in beginning inventory, and we sold 20 at a cost of $53. So we're going to put that in. And we're going to calculate the total cost, which comes up to be $1,060. Then we're going to focus on our inventory on hand column. Now, we already know we started out at the beginning of the month with 24 units. We just finished selling, gang, 20 units. So how many units do we have left? Simple. We only have 4 units remaining, gang. And the cost of those units are still $53. Which give us a total cost of $212. Remember, gang, our units that we sell at the end of the period represents cost of goods sold, which falls on the income statement. In contrast, the units that we don't sell, the ending inventory, is represented on the balance sheet. We're going to check our answer. Fantastic. Moving on to November 8th. November 8th, gang, we saw that there was a purchase of 30 units at a total cost of $70 each. So we're going to go ahead and put that amount in. And we're going to calculate our total cost, which comes up to $2,100. And we're going to move on to our new inventory on hand. So, gang, right before November 8th, we had a remaining amount of 4 units. We're going to carry forth those same 4 units at the cost of $53. Now we must consider the additional purchase on November 8th for the 30 units. So we're going to go ahead and plug that in as well. We're going to check the answer. Great job, gang. November 17th shows us that we have a reported sale of 30 units. So we just finished selling 30 units. Now we have to discover or investigate where are they coming from. Now we have several types of inventory from various costs. So we're going to utilize the FIFO method in order to do so. And FIFO tells us the first thing that's coming into business will be the first thing that's sold, gang. And so those 30 units are going to be sold from our very first purchase that we have remaining, which is the 4 units from beginning inventory at a cost of $53. Now that we've accounted for the 4 units in beginning inventory, we still have additional units that were sold. How many? We started out selling 30 on November 17th. We just accounted for 4. Therefore, we still have to discover 26 additional units to be sold. And so looking at our table that we have, there's only one other place that this inventory could come from. And you got it, gang. It's coming from the November 8th purchase, 30 units at 70. But remember, we only sold 26. So we're going to input that amount and calculate the total cost. Next, it's time to account for our remaining inventory on hand. Gang, we no longer have any beginning inventory available. We just finished selling all of those. And we also sold 26 units of the purchase on the 8th at $70 of the cost. So how many units do we have left from that November 8th purchase? We have 4 units left, gang. And that's going to be our ending inventory on hand at this moment. Therefore, 4 units at $70 will give us a total cost for ending inventory of $280. We're going to check the answer. Good job, gang. Next, we have to account for the November 3rd sale of 2 units, gang. So, we know that we sold 2 units, and again, we have to utilize the FIFO method to figure out where they're coming from. And based on our FIFO method, we said the very first thing that was purchased will be sold. However, we no longer have any available units to sell from beginning inventory, but we still have 4 units remaining from the November 8th purchase at a cost of $70. Therefore, that's where those 2 units sold will come from, which gives us a total cost of $140. And last but not least, we have to now consider how many goods we have left available in ending inventory. So we initially only had 4 units left at a cost of $70 each, but we just finished selling 2. Therefore, we only have, gang, you got it, 2 units left at a cost of $70 each, which gives us a total cost of $140. We're going to carry forth our total amounts for each column. Check our answer. Excellent job, gang. So now they want us to identify the cost of ending inventory using the FIFO method. We already calculated, gang. We realized our ending inventory as of November 30th consists of 2 units left at a total cost of $140. We're going to check the answer. Excellent job. Next, we must identify the total cost of goods sold that will be reported on the income statement. We've already done that, gang. We know that our total cost now is $3,232. We're going to check the answer. Nice work. So now that we filled out the table correctly, we are going to utilize the perpetual inventory system to make the proper recordings of the transaction. Under the perpetual inventory system, every time a purchase or sale of inventory takes place, we automatically adjust the inventory account. So in terms of accounting for the November 6th sale of 20 units, we understand that we're going to utilize the initial sales price of $119 each. And so to account for our revenue that was earned, we're going to debit accounts receivable and credit service revenue for the 20 units at $119, which gives us a total of $23.80. We're going to check our answer. Well done. Next, we're going to record the cost of goods sold that was incurred for selling that inventory. Remember, gang, inventory is an asset when it's purchased, but the minute that it's sold, an expense is recognized, and we consider that to be cost of goods sold. Therefore, we're going to utilize our previous calculated amount in the table for the cost of goods sold relative to November 6th sale. which means that we're going to debit cost of goods sold and credit inventory for $1,060. We're going to check our answer. Well done, gang. Now we have to consider the November 8 purchase of 30 units at $70. And this is easy breezy, gang. We're going to simply debit merchandise inventory and credit accounts payable for the $30 at $70 each, which gives us a total amount of $2,100. We're going to check our answer. Fantastic. Now we have to recognize the November 17th sale, gang. But first things first, let's record the revenue that was earned. We know that on November 17th, we sold 30 units, and we also know the sales price for each is $119, which will give us a total amount of revenue earned of $35.70. Therefore, we're going to debit accounts receivable and credit service revenue for that amount. We're going to check our answer. Good job, gang. So now it's time to account for the cost of goods sold for the November 17th sale, which means that we're going to utilize our already calculated record within the table. Therefore, we're going to debit cost of goods sold and credit merchandise inventory for $2,032. We're going to check our answer. Well done, gang. And last but not least, we must now journalize the sale of the 2 units from the November 3rd transaction. So, to account for revenue, we're going to debit accounts receivable and credit service revenue for the 2 units at $119 for $238. We're going to check the answer. Nice work, gang. And for the last journal entry, we must recognize the cost of goods sold for those 2 units by using our already calculated amount in the table, which means that we're going to debit cost of goods sold and credit ending inventory for $140. We're going to check our answer. Well done, gang. So there you have it. A very thorough illustration of how to properly utilize FIFO method and make the proper journal entries for the transactions. If that light bulb clicked, gang, please like, subscribe, and share the channel with your friends, because you are now closer to chasing the bag with this accounting information. As always, I'm Dr. Who, and I'll see you soon. Thanks.